This is the MTPredictor weekly update for October 31st. Good to be back. I apologize to those of you. I had a webinar scheduled last week. I couldn't make it. We had a tornado come through the property, and subsequent to that, I hurt my back pretty good, and I've been laid up in bed for a few days, and I'm probably going to see limited action the rest of this coming week. But this was a big news week. Market is in kind of critical juncture, and we'll kind of look at all this stuff here, starting with the daily chart. But again, I wanted to apologize if I hadn't responded to your email promptly about the webinar, not being able to make the webinar. I literally just couldn't get out of bed, and my wife didn't have the codes and stuff to access my emails and lists and stuff like that, so I figured I'd get to it when I got to it. So again, apologize for that, and just if you would just be a little patient with me as I recover. So here's the daily chart of the YM, and I put some of the Elliott wave analysis on here, and I put some of the major Elliott wave analysis. We have this ABC pattern. You can see that we're into the typical wave C resistance now. We took out that decision point area. As we got that red reversal bar in here, we got a close above that area, and the market continued higher right to the top of the typical wave C resistance there. And the market is kind of leveled off. As you know, this week, big news week. Markets are in a holding pattern basically. We've got the elections, midterm elections on Tuesday, Fed meeting on Tuesday, QE2 also coming, I think, on Tuesday, or on Wednesday, I think that is. FOMC and meeting starts on Tuesday. The decision is on, rate announcement is on Wednesday. And our regular economic data coming out. So, you know, very big news week. A lot could happen here. We can only do what we see here, but I'll show you some of the scenarios anyway. So obviously we could move higher out of this after this consolidation is done. You know, the trend, the bigger trend is still long, though it's you know, lost some strength as we consolidate and into this resistance. Our next resistance is this decision point resistance based on a prior swing high that's up above this 11,400 area in the YM, and that goes beyond the 11,600 area. Obviously this could hold resistance and we could fall off from here as well, but let me just show on the weekly chart what I did with the weekly chart here. Of course, we got our weekly DP, and that was our rally off the March lows 2009 up to our highs this year in April. We got our DP there that still has not been taken out. And what I put on here is I put some of the major swings here, and we've got a major either wave 2 or B swing here. So meaning this could either be from here down to A, from here up to B, or down to 1, up to 2 here, and then down to either C, or let me just show you in the weekly chart. So you can see the wave C, the minimums would be all the way down around that 6,200 area in the Dow. Again, this is big, you know, bigger picture stuff. Because this you know, this swing alone goes from October of 2007 to April of 2009. Okay, so we're talking bigger picture here. This wave 2, now you can see the area, the size of this resistance goes from basically 10,500 to 12,500. So we got a lot of points in there. But this is an area to watch. If we come out of this area, then obviously the market, you know, we may go to test this high and then, you know, the all-time high there. If it fails in here, you know, the bigger move would be down to, or the if this is wave B resistance, this would be the wave C target. Now, if this is wave 1 up to 2, and we projected where would wave 3 down come. Well, this is where you get all those Elliott wave people with their projections, Prechter and so forth. I think he's predicting, possibility of the Dow 400 or whatever. Well, this is where basically where they're getting that. You can see down here, this little sliver down here around Dow 200, 300 area would be the wave 3 down. So it's a big, big move. And I think the market is, obviously in a critical point here. We'll see what happens this week. Obviously, I think that will move the markets. And with what's going on, one of the things that Bernanke said at the beginning of this whole mess is he said real estate got us into this mess, and it's going to have to be real estate that gets us out of this mess. And we just haven't seen that yet, and that's why I think we're still in the mess. We'll see what unfolds from here, but I think the market, by all rights, would be good for the market to have a good, healthy correction at this point. Because if it doesn't in here, between now and say the spring, if it doesn't have that correction and we just continue higher and the news in real estate and jobs picture and everything still doesn't improve, then we're getting into an area where markets may move higher, but when they do fall, they're going to have a much bigger, much more room to fall, and it could get, could get ugly. On the other hand, if we come out of this real estate mess, job picture improves, everything starts running on all cylinders, then we may be out taking Dow 14,000 out and be on our way to new highs. So, I'm not here to predict. We're just going to react. But those are the different scenarios. We just have to be careful that at any point they can kind of pull the rug out from under you. You just have to be aware. Again, market still unhealthy. Doesn't mean it can't go higher. But it's getting during that time where don't be surprised if you wake up one morning and the sky's falling, and the day before everybody was saying how great things were. It's just one of those times, I think. Anyway, again, apologize. Hope I didn't miss too much. I'm trying to get to all my emails and take care of all those things. So be patient, and we'll take a look at these markets, especially after this week. Should be pretty eventful, and we'll do it all again.